Welcome to our special report on the Canadian economy. Today, we're diving deep into the titans of the Toronto Stock Exchange, forecasting the largest Canadian companies by market capitalization as we look ahead to 2025. The economic landscape is constantly shifting, shaped by global trends, technological advancements, and consumer behavior. So, which companies are best positioned to lead the pack in the Great White North? Let's break it down. To start, it's impossible to discuss the top of the TSX without talking about the financial sector. Canada's big banks have long been the bedrock of its stock market, known for their stability and consistent dividends. Leading the charge is Royal Bank of Canada, or RBC. As the country's largest bank, RBC has a massive diversified portfolio spanning personal and commercial banking, wealth management, insurance, and capital markets. Their aggressive expansion into the U.S. market, particularly through the acquisition of City National Bank, has given them a significant growth engine outside of Canada. By 2025, we expect RBC to continue leveraging its technological investments in digital banking and AI-driven analytics to enhance customer experience and operational efficiency, solidifying its #1 position. Hot on its heels is another banking giant, Toronto-Dominion Bank, or TD. What sets TD apart is its substantial retail footprint in the United States, which is even larger than its Canadian operations. This provides a natural hedge against any downturns in the Canadian economy. TD's focus on customer service and convenience has built a loyal customer base. As they continue to integrate their acquisition of First Horizon in the U.S., their scale will grow even more. Looking towards 2025, TD's ability to navigate interest rate fluctuations and its strong capital position will be key. We predict it will remain a firm contender for the top spot, consistently challenging RBC. Now, let's pivot from finance to the digital economy. Shopify, the Ottawa-based e-commerce behemoth, has been one of Canada's greatest tech success stories. While the stock has seen its share of volatility, its fundamental business model is incredibly powerful. Shopify empowers millions of entrepreneurs and businesses worldwide, from small side hustles to major brands. By 2025, the e-commerce trend will only have grown stronger. We anticipate Shopify will have deepened its ecosystem with more integrated logistics solutions through its fulfillment network, enhanced point-of-sale systems for brick-and-mortar stores, and more powerful tools for business-to-business commerce. Their focus on innovation and supporting merchants is a powerful growth driver that could see them cementing a place in the top 5, representing the new face of the Canadian economy. We can't overlook the vital role of Canada's natural resources. Enbridge, North America's largest energy infrastructure company, is a critical player. They operate the world's longest and most complex crude oil and liquids transportation system. While the world is transitioning towards cleaner energy, the reality is that traditional energy sources will remain essential for years to come. Enbridge is smartly navigating this transition by investing heavily in renewable energy, particularly offshore wind projects in Europe and solar projects in North America. By 2025, Enbridge's story will be one of balance, maintaining the profitability of its conventional pipeline business while aggressively growing its green energy portfolio. This diversified approach makes it a resilient and powerful force on the TSX. Another key player in the resource sector is NLOTN, the world's largest provider of crop inputs and services. With the global population continuing to grow, the demand for food is inelastic. This places NLOTN in an incredibly strategic position. They play a vital role in global food security by producing and distributing potash, nitrogen, and phosphate fertilizers. Their integrated business model, which includes a vast retail network that sells directly to farmers, gives them a significant competitive advantage. Looking to 2025, factors like global supply chain, stability, and sustainable agriculture practices will be paramount. NLOTN's leadership in this space, coupled with the fundamental need for its products, ensures it will remain one of Canada's most valuable companies. Let's return to the financial sector, but with a different angle. Brookfield Corporation. Brookfield is a bit different from the others. It's a leading global alternative asset manager with a focus on real estate, renewable power, infrastructure, and private equity. They own and operate long-life assets and businesses, many of which are pillars of the global economy. Think toll roads, ports, utilities, and prime office properties. Their model is built on long-term, stable, and inflation-protected cash flows. As investors increasingly seek alternatives to traditional stocks and bonds, Brookfield's expertise becomes more valuable. By 2025, we expect their assets under management to have grown significantly, driven by strong fundraising and strategic acquisitions. Their global reach and diversified portfolio make them a cornerstone of the Canadian market and a likely top 5 company. What about the telecom industry? Bell, or BCE, has been a household name for generations. As Canada's largest telecommunications company, BCE provides a massive range of services, including wireless, internet, TV, and media. The rollout of 5G technology is a major growth catalyst. This isn't just about faster phone speeds. It's about enabling the Internet of Things, smart cities, and new industrial applications. By 2025, BCE's investments in its fiber optic and 5G networks will be paying significant dividends. Their ability to bundle services and retain customers in a competitive market, combined with their extensive media assets through Bell Media, gives them a powerful, integrated position. While facing stiff competition, their sheer scale and infrastructure investments will keep them at the top. And we can't forget the railways, the original arteries of Canadian commerce. Canadian National Railway, or CN, and Canadian Pacific Kansas City, or CPKC, are the two giants that move a vast amount of goods across North America. CN boasts a unique network that connects 3 coasts: the Atlantic, the Pacific, and the Gulf of Mexico. This gives them unparalleled access to different markets. CPKC, following its historic merger with Kansas City Southern, now has the only single-line railway linking Canada, the U.S., and Mexico. This creates a powerful trade corridor. By 2025, both railways will be benefiting from nearshoring trends where companies move manufacturing closer to home. The efficiency and lower carbon footprint of rail compared to trucking will also be a major advantage. It's a tight race, but both are locks for the top tier of Canadian companies. So, to recap our forecast for 2025, the top of the TSX will likely be a blend of the old and the new. The financial giants like RBC and TD will remain dominant due to their scale and stability. Tech trailblazers Shopify will represent the power of the digital economy. Energy infrastructure leader Enbridge will showcase a successful transition strategy. And global players like Brookfield and Nutrien will highlight Canada's reach beyond its borders. The railways and telecoms will continue to form the essential backbone of the economy. The key themes for success leading into 2025 are clear: technological adoption, global diversification, sustainable practices, and a focus on essential goods and services. Companies that embrace these themes are the ones we expect to see leading the Canadian stock market. Of course, the world can change in an instant. But based on current trends and strategies, these are the titans to watch. Thank you for joining us for this in-depth analysis. What are your predictions? Let us know in the comments below. Don't forget to like this video and subscribe for more reports on the companies shaping our world. We'll see you next time.